Hello and welcome to With Weldon Anderson. This is the channel where we talk about economic, financial, and political things in simple terms. Today we're going to be talking about the strong dollar. Now stick with me. If you sit through this entire 5 or 6 minute video, you will understand what a strong dollar is, and I need you to give me a thumbs up and a like. Let's start with something called dollar hegemony. And I'm going to just briefly talk about this, is that the dollar is a unique currency in the world. It is the principal currency in the world. It is somewhat different from the yuan, the euro, the pound, and the yen. The fact that it's the most widely used currency in the world, and that brings certain advantages to it in that respect. Another thing to mention is when all trades, or most trades in the world, are finally settled, most of them are settled in dollars, which means that a currency like a yen or a currency like a ruble would be converted into dollars in order to do the transaction. And the reason why that happens is because, we're going to talk about a little bit later, is the United States is the most preferred currency in the world. And also the United States has the most reserves in the world. Okay. Now, the fact that they're connected, the currency of a foreign country had to be converted to dollars, means if the dollar fluctuates and you've got to buy dollars, your currency is going to fluctuate. So that's important because of inflation and deflation. Simply putting, if you have to provide more of your currency to buy more dollars to do a settlement of a trade, it creates an inflationary account for you. Okay. Now, let's talk a little bit about how, as I said, the US dollar is the safest currency in the world and the chief trading currency in the world. So let's spend a moment on what is a healthy economy. A healthy economy is described as low concentrations of wealth, where the money is spread out amongst a lot of people in the economy. It has to have stable economic conditions. No inflation rapid, no recession, no abnormal factors that come into it. And there must be broad market conditions like low employment, low inflation as we mentioned, and a good growth of the gross domestic product. Now stick with me. You may have heard the term gross domestic product a lot of times. I'm going to try to put it in simple terms. It is the total amount of goods and services a country creates in 1 year that are finished goods, less the amount of imports that they take in. Okay. So, that's some background there. And there are certain benefits that you have when you have a strong dollar, whereas your currency, someone has to provide more of their currency to buy your currency. And there's some disadvantages. One of the biggest disadvantages, or advantages I should say, is imports from other nations are less costlier. This is good for the American consumer. Okay. Contrary, exports of American goods to other places are more expensive. Interest rates climb, which has its own effect on the economy. And an American subsidiary doing business in another country, their profits may vary because they're being sold in the other currency and then converted back to dollars. So that could either be a good thing or a bad thing. It's also very inexpensive to travel outside the United States because the dollar is stronger. And as I said, your exports are typically higher. Now, domestic companies, I should say, actually, the executive branch really does not like strong currency because it sort of slows up the amount of exports that they can send out to the rest of the world. The cost for the American consumer, as I said, is a lot lower. So, thank you for your time. Give me a thumbs up and make sure to tune to the next video. Thank you.